Approaches and methods of valuation. Now, please remember, it doesn't really matter as to what asset we are talking about, whether we are talking about tangible assets or intangible asset or derivatives or options or fixed income securities or any other financial assets or liability or plant and machinery or land and building. Please remember, as far as the approaches and the methods of valuation are concerned, these approaches and the methods more or less are applicable to all kinds of assets, all kinds of assets. The difference can be only with regard to situation to situation. For example, and please pay attention. For example, a discounted cash flow method can be used in every situation for every asset that has the capability of independently generating cash flow, right? So that is your discounted cash flow method, and that is what you need to understand and remember. All these three approaches that you have already heard, that you have already covered, and all the methods they are under are equally applicable under all situations. Meaning what? Meaning, what are the approaches? Approach one is income approach. So under the income approach, there are two methods. One is income capitalization method and second is discounted cash flow method. Income capitalization method is also known as PECV method. And what is PECV? Is profit earning capability valuation. Profit earning capacity valuation. Profit PECV, profit earning capacity valuation. And discounted cash flow, I am sure it must have been covered many times or sometime already. Under the market approach, you have the comparable company. So what you do the evaluation by comparing the company that you want to value with another company whose valuations are available with you and which is more or less same as your company. So that is your comparable company method. Or you can have comparable transaction method. And comparable transaction method and the comparable company method, what is the difference? The difference is very simple. In the comparable company method is applicable when you are doing valuation of a company. And a comparable transaction method is applicable when you are trying to value a particular transaction. So when you are talking in terms of buying or selling of a company, you will try to find the valuation based on the comparable company method. But if you are trying to do the valuation of a transaction, let's say buying a house or selling a house, or buying a plant and machinery, selling a plant and machinery, in that case you will use the comparable transaction method. And that is the difference what you need to understand very clearly, right? So comparable company method, comparable transaction method are two different methods, but they would be applicable under two different situations. Comparable company method will be applicable in case of a company and comparable transaction will be applicable in case of a transaction. Under the market approach, you also have something which is known as market quoted price based valuation. And that means what you do, you pick up the price in case if the company that you are trying to value is listed on a stock market. So you just pick up the price which is available on the stock market and that becomes your valuation. Under the asset approach, there are four methods. So number one is book value method. Very simple. What is the meaning of book value method? The meaning of a book value method is you simply pick up the numbers from the balance sheet of the company and using the numbers from the balance sheet of the company, you do the valuation. So whatever the number has been given of the assets and the liabilities, you take the total of all the assets minus all the liabilities and difference becomes the book value of that company. So that's your book value method. Adjusted book value method, again very simple. So in case of book value method, what you do, in case of book value method, you just pick up the number from the balance sheet and use them for the purpose of valuation. In case of adjusted book value, there is a slight difference. And what is the difference? The difference is in case of adjusted book value, you will not pick up the number from the balance sheet as it is, but you will make the adjustment. What adjustment? Let's say you are trying to do the valuation of a company based on the adjusted book value method, and there is a land as an asset in that company, and that land was purchased by the company 10 years back at 1 crore. Today that asset is worth 20 crore. So when you are trying to find out the value of the company based on the adjusted book value method, what you will do, you will adjust the number of the company, the figure of the company which are given in the balance sheet. So for the purpose of valuation of this asset based on the adjusted book value, you will not take the amount to be 1 crore, you will take the amount to be 20 crore, and that is your adjusted book value. Then you got a replacement method. That means if this asset that you're trying to value is to be replaced as it is, that is known as replacement method. And then you have a as is and what is. That is your as is what is. That means in the same condition which it is today. And then you got a liquidation value method. That means if this, assuming that this company has to close, all the assets have to be sold under force, under stress, and what will you recover by selling those assets minus the liabilities that you have to discharge, minus the expenses that you will incur in selling and disposing of the assets and the liabilities. What will remain? That will be the liquidation value of the business. So these are the income, these are the three approaches and also different methods of valuation. What you have to remember, friends, and I can tell you based on my experience of passing the exam, and also based on my experience as practicing as a valuation professional, please remember, income approach is the most fundamental, dependable and reliable method of valuation. So whether it is income capitalization method or it is discounted cash flow method, these in my view and in my experience are the most fundamental and dependable methods for the purpose of valuation. And why do I say this? You have many classic examples in the recent past. So you have a company called Zomato which came out with a public issue. 1 rupee share was priced at 76 in the IPO, and when the IPO got listed, it got listed at 140 rupees. And today, what is the price of Zomato? The price of Zomato is about 90 or about 70 to 90 rupees. Meaning what? Meaning the valuation of Zomato for the purpose of listing was not done based on the discounted cash flow method. It was done based on some market parameter, and that is how you realize that the people who bought the share of Zomato at 140 and the share today is languishing at 70 rupees or 90 rupees, you can imagine what kind of loss those people must have suffered. So as a valuation professional, always depend on discounted cash flow method, always depend on income capitalization method. Market approach is good, and in certain times you have to make use of market approach. But remember, let whatever is the valuation that you are arriving at using the market approach, try and support it, try and cross check it by using the discounted cash flow also. If the valuation of based on the discounted cash flow is coming more or less around the same amount which is the market valuation, then you can be rest assured that the valuation that you have arrived at is dependable, it is reliable, is authentic, and will hold water for all times to come. And then the approaches, the methods that you have under the asset approach, remember, are good only to give you the downside, only to give you the lower side as to what is the minimum, can be the value of this company or this asset, and that is what you will get from the liquidation based on the asset approach or the cost approach. Now here I would also like to tell you, based on my experience, please remember, asset approach and cost approach are not two different approaches. It is the same name for it. It is just different names for the same approach. So sometimes you would read as cost approach, sometimes you would read as asset approach. Please remember, both mean the same thing. And finally, friends, as valuation professional, arriving at the fair value by using whichever approach or method got to be our main driver. So tomorrow when you become valuation professional, you start practicing as a valuation professional, always keep it in your mind as to what is your driver. Your driver is to ensure to find out the fair value. If you find out the fair value, remember, it will hold you strong in every situation, in every decision that you would take based on that equity. So these are the approaches and the methods which are available to all of us for the purpose of valuation. In case if you have any question on this, please go ahead, else I will move to the next topic.